Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at semiconductors, that is AMD, SMCI, ARM, Broadcom, and Micron. I already did a video on NVIDIA, so check that out on my channel if you are interested. Now, what we have been seeing on semiconductors this whole last week is a downfall, right? It's just been bearish, right? Any upside, if it even tries to happen, that's just being a rebound, right? And overall structure, and I just turned on my another tool as well here. Overall structure still remains bearish here on AMD, all right up from here. We haven't changed anything on the green side on the daily interval, so things are still bearish. Now, what to look for? What are the levels going in this week that we may potentially, need to watch for some price action? Now, on the daily interval, we are bearish, and right now there is not much you can tell from the daily interval what are the things you are watching. Definitely, as long as we stay below 136 and 77 cents, let me mark this here for the level to watch right now. As long as we stay below this level, 136 and 77 cents, we are still downward bearish, all right? It's no sign of bullishness. Let's go to the hourly interval and let's talk about a couple of things here. So that very level, guys, has a potential off zone. Any rebound on the lower time frame is just a bearish rebound, all right? We are, I'm pretty sure, very low below the cloud as well. Yeah, so that's up above the overhead resistance cloud that's been running. So we are still quite negative, quite below that. There's, again, why would you play upside? Well, right? So rebounds are just a short play unless we get above the cloud, right? So you can see once we lost it, again, if you just follow these principles, right? This was it, and just keep taking partial profits out at these extensions. At these extensions, you can also use this structural indicator of mine that, let's say, let's take an example here. How about that, right? Like, let's talk about it. So for example, let me actually clean up the drawing a little bit, and I'm gonna I just want to tell you this one's strategy as well. So if you have access to this tool of mine, once we broke below the cloud, let's say you open up the short position based on your risk tolerance, how much you want to take profit. As I always say, take partial profits out. And let's say you were carrying it, you took some partial profits out here, you took some partial profits in the extension. Stop loss can be staying above the cloud, and you can still size out in the green if you are not comfortable, if you think, oh wow, it may just continue higher. But so you can take some out here as well, the size, but fully stop loss is above the cloud, right? But then we fall much lower. Once things start to turn green after such a big fall as well, then also you can take some out and things like that. And still, so far, structure hasn't changed on AMD. We are still downward. This is on the short side, right? We are talking about the short side play. So yeah, and as I said, yeah, that's the level to watch. Below that, we are still bearish, guys. 136 and that's 77 cents. Let's also take a look at 5 minutes interval. Is there a strength possibility? Now, well, okay, here's the thing. It's your choice. If this can, let's say, if in the pre-market continues lower, but somehow it holds 132, stays above it, and can continue above 134, intraday rebound can come to 136 and 77 cents. Accordingly, based on your type of trade, if you like to trade rebounds, sure, that's the play, but that will only be until 136 and 77 cents as the first leg. Going above that, if we get above that, it won't be a trade, I think, on, well, on that particular day. It could roll over to the next day, but right, we'll see if price action does that. But that's the level to watch for that, right? 136 and 77 cents. What I wanted to also talk about on the hourly interval is the amount of consolidation we have here. Let's see if AMD tries to absorb here, and we might see some rebounds, guys. Like, that's the part of trading. With the upside, we have pullbacks. With the downtrend, we have rebounds. So that's the possibility. But as I said, below this red line, we are still in the negative bearish structure. SMCI. So let it load. Yeah. So SMCI is This thing is right now just even on that Hindenburg stuff coming out and all of that. Um, so yeah, structure on this you can see has been just still bearish. And there is just no sign of upside right now, guys. We have lost another level that is 394.98 cents. If a good rebound has to come on this, that will be above the 419 and 82 cents. If SMCI can do that, if it can get above 408 and 19 and 18 cents, then uptrade can come until 478. But that would be it for now though. Otherwise, yeah, no, it's just in the downtrend, and rejections at any of those levels and it's just downtrend, and accordingly you will have a stop loss on the other side wherever the structure would change, right? Or wherever that those levels would break, as I just talked about. Taking a look at hourly interval as well. Now, well, yeah, so there are two levels. Look, either it can just keep rejecting at this level underneath of 395 and keep continue to fall, or if it gets above it, it can try to make its way 419, but the little bit of a stronger rebound that would only be above 408 and 19 and 20 cents. Otherwise, no. Yeah, right. So that's something you will be watching, but it's still in the downtrend overall structure I just showed you. ARM. So ARM testing 200 days moving average, getting a little bit bought back up, but guys, that's not a confirmation of a bullish structure. Yes, we are getting bought back up. Junior trader, it's time to buy because there is a, wick coming down at 200 days moving average, time to buy. Well, in my opinion, not really. We want to see a price action confirmation. Right now, we are on the daily interval, still in the bearish structure on ARM here. And let's go to the hourly interval here. And what is that confirmation if we want to see the upside? Well, we need to change the structure. And that will be, guys, if it doesn't break below, much lower, and it can get above $120 at least, then only I would say maybe some start is happening again to the upside. But just remember, overall, stay with the structure. If the structure is to the downtrend, your best bet is to just stay with the structure. Rebounds, you can short them with the stop loss on the other side of these levels, right? And yeah, and that's the thing, right? These are the levels. If we break one level to the upside, can continue higher, right? And if any decisions you make, you will have a stop loss on the other side. But what you really have to watch is, so at these important levels, let's go to the 5 minutes interval, right? At these important levels, you have to see the price action. What is the price action doing? For example, let's take a look at this significant level and that trend line area as well, right? So there's this significant level under the cloud as well. What are we seeing? The price action is trying to come back. Okay, let me turn off this indicator, right? Or let me actually change its settings to original, which will be showing the original candles. Would you want to buy here on these two green candles? If you're just seeing, this is how you would see your chart if you don't have my tools. You will not even see the cloud behind. Okay, let me actually turn it all off. This is what you would see, right? Won't you think that, oh wow, two green, if your bias is bullish and you're not prepared, like what's going on, right? You are like, oh, there's this green candle here, there's a support trying to, if you are looking for even a support without my tools, that's up to you, how you want to do it. You will have to do your own analysis for that. My tools take care of this all for you. And you are like, oh, two green candles are coming, we're gonna go up from here, this is the time to buy. This is, you may think this way, right? Because this is where the chart would be like this. This is, you won't be seeing the price action, but this is where the chart would be. And you are like, oh, these two candles are coming, a rebound is coming, at a closer price to the bottom, time to buy, strong green candle. However, if you have my tools, let's turn them on one by one. What are we seeing? We are around a significant level. Let's turn on my cloud as well, my other tool. What are we seeing? We are still below the cloud, the zone, the strength is still negative. We are at a significant level. We have to see the price action here first because we are below the cloud, right? And easy peasy, let's just do it to flow. And what are we seeing in the flow? Oh, well, those green candles means nothing because we are still red, right? So all these tools helps you understand like what decisions to make, right? I like to keep it attentive, but you can choose as per you like. So You get my point, right? The structure is not bullish. As this is how you would use the tools for day trading. It just makes it so simple to trade. If you need access to my tools, links are in the description below. There are also training videos that comes with the access, so you would know how to use these tools as well. You can set alerts and everything. Build your own strategy using alerts, right? You can, yeah, like all of that stuff can be done, right? You can send alert signal however you want to do it for yourself. If you have your broker APIs, that's up to you if you want to connect to those using the alert system, but all these things can be done, right? Okay, so I don't even remember what we were talking about. Wow, we went into a rabbit hole there. All right, never mind. So yeah, guys, we are still bearish. Oh, well, yeah, I was talking about the price action structure, right? So yeah, 120 and above is only where I would expect a little bit of a change or strength. Otherwise, now we are below 20 days moving average as well. And if we lose 200 days moving average, it's kaboom. You know, then the next level down is 108 and 68 cents. That's the level we are watching there. All right. Wow, I'm going quite in rabbit holes in this video. All right, Broadcom. So Broadcom structure, you know, being bearish on this, then post earnings also it's selling off. Right now, there's just a lot of downside happening on this thing. So yeah, not really much you would want to do here on the upside. It's just in the downside, right? Even if, let's say 200 days moving average, even if Broadcom has to show us that it can hold it, then also we have to see if it holds it, right? If it can hold it. Right now, am I seeing any hold here? No. Am I seeing any price action of higher pivot? No. What am I seeing? The bearish structure still. And don't worry about these so many lines showing up. For a low volatile stock or something, you can change the settings here. Let's do medium. Let's see how things looks like. I might have to go low on Broadcom here actually. Yeah, I think low is fine on Broadcom here. Yeah. So yeah, guys, so yeah, no, with the Broadcom right now we're still in the downward structure. Not even a rebound, good possible rebound is possible unless we break 140 and 36 cents to the upside. If we can break above 140 and 36 cents to the upside, then sure, some upside is possible. Intraday only though, because overall structure is right now negative. We'll have to see a lot of consolidation here before overall structure if it tries to turn upside. Otherwise, no, this is still in the bearish structure. All right, let's take a look at Micron and we'll wrap it up with that. All right, so let's go to the daily interval. And we are just breaking another structure, guys. So we are still technically full on bearish and we have lost this level as well, $87. The next level down is $80 actually. So not looking good right now. Let's go to the hourly interval. And let the chart load. Yeah, so on hourly interval as well, there is not much in the direction for upside. You can see, wow. I mean, it's so simple on Micron if you want to trade just using my tool. It's funny. Yeah. Anyways, so yeah, right now, as long as we stay below 87 and 83 cents, that's just an area of resistance right now. And we are still in the downward structure. And if we lose levels to the downside, yeah, we are just falling, right? So anyways, yeah, nothing to look to the upside on this right now, guys. It will have to change the structure. And when it will change, I'll talk about it. Right now, we are still in the negative bearish structure. Okie dokie, guys, that's it for this video. And if you found it helpful, valuable, please hit the like, subscribe. If you need access to my tools, links are in the description below. And I forgot to tell you, don't forget to check out my Junior Trader Dividend Investing channel. More videos will be coming out this weekend especially. I did some more changes or adaptations to my portfolio. And you will see that lately, right now, my portfolio is going through some losses. Not net losses, but some positions are net losses. So I'll talk about the plan, what I'm planning to do with that, all of that, right? So if you don't want to miss out, subscribe here as well. Link to this channel will be in the description of this video. All right, guys, with that, have a good one, and I'll see you in my next videos. Take care. Bye.